Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. 800-31990 or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
I got a bad feeling about this.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. And before we get into our intriguing content today,
I got a bad feeling about this.
yeah, I think let's welcome our featured guest.
I got a bad feeling.
Yeah, I know we got that. We already said that.
They let me
Jim
in.
Norton's in
They
the
let
house.
me in the building. I'm not sure who was silly enough to do that.
Can't believe we didn't lock the door quick enough.
Not
Security. We got security. We got Jim Norton here.
You snooze, you lose. Now we finally want to talk
idea.
about something good, though.
Yeah.
I don't know what.
Wonder who's going to be here. Then. Oh, I'm sorry. Let's. Something we talked. Speaking of something good, let's celebrate.
All right.
What are we going to celebrate today? Well, we'll start off with the easy stuff. It's National Jelly Bean Day. I've beaten anorexia. I like jelly beans. So let's. Jelly beans or jelly bellies? Those look like jelly beans.
Or jelly bellies, jelly beans?
No, jelly bellies have all the different flavors in it. Jelly beans are usually just, they look good, but they taste like sugary candy. They taste good too, but I don't think they have the same flavor arrangement that jelly bellies have. And hey, I have beaten anorexia, so I understand.
Dude,
I understand about candy.
Dude, you can't use that anymore. You're so anorexic. It's not even funny. Look at you.
My scale still complains every time I step on it.
Yeah, well, I look at you just like, wow, who's that guy over there?
Yeah. Okay. So now let's look at today's also National Earth Day. Now, I guess according to AOC, when she's not, I guess, hanging out with Jimmy Kimmel, I think what do you have? About 3 years left until the Earth comes to an end. I think that was what she predicted.
Which time?
Yeah, exactly.
No, it's right, because this Earth Day started in the 70s. I remember when it started in the 70s.
Okay.
Did I just do that? Did I just do that? I just did that.
You're way older than me.
I just reminisced. Yeah, I remember when they started Earth Day.
Oh, Jim Norton.
And then
1969, the concept of Earth Day was established at a UNESCO conference in San Francisco on March 21st, 1970. A sanctioned proclamation was signed by Secretary General Hugh Thant at the United Nations a month later, April 22nd, 1970. U.S. Senator Gaylord Nelson founded Earth Day, and Jim Norton remembers every one of those dates off the top of his head.
They had a logo and everything.
He was just starting on Social Security at the time. Oh, you're about your 30th or 40th year in real estate back then.
Probably.
We don't have to go to an atlas for Jim Norton.
I am the atlas.
He is the atlas. Everything that we're going to talk about today, Jim's lived. So
miserable.
And he comes in out of his own free will of this.
I did.
You might have to double your salary, Jim.
Yeah, thank you.
Okay,
I appreciate
the
that.
markets. Dow Jones Industrial Average is up 365 points. The NASDAQ is up 312. The S&P 500 is up 61. Oil is up $3.22 a barrel. Ow!
What's
Yeah.
the number? 90.
$92.89 a barrel. 92. Now we don't use the oil coming out of the Strait, but I heard a report this morning, and it was on the mainstream media, so I don't know if it's accurate or not. And I'll say it as I've said many, many times. If you want good news, you can either listen to Ron Siegel Radio, or you have to go and pay for the news services that you can vet and make sure they're giving you accurate data. Fox News, ABC, NBC, CNN, MS, and whatever they call themselves now. None of those they're giving you narratives because all they want to do is get ears to commercials. Mm-hmm. That's all they care about. Now, we have no budget, so I can tell you what I think, and I do all the time. And whether you like it or not, whether you agree with me or not, you know that I'm going to give it to you as I hear it, as I believe it. And I'll tell you if I'm giving you commentary, my opinion, or if it's news. When I tell you that the 10-year Treasury right now is flat, 4.293. It's actually down 0.003 as we speak. Or if I tell you the mortgage bond is flat, it's up 0.01 right now. That is fact. You can go and check it out on your own. It's all right there. If I tell you that crude oil inventory was expected to drop by 1.2 million barrels, and it actually increased by 1.925 million barrels, those are data points that I'm just sharing with you. When I tell you that the earth is not coming to an end, I believe it's fact, but I got to say it's my opinion. And I've said many times that I believe that like we do in the mortgage world, like Jim does in the real estate world, we have to supply a license number. That license says that I am a licensed mortgage loan originator. Jim's license says he's a licensed real estate agent. And I guess probably since before the DRE was in existence. But the bottom line on these things, why don't these media outlets have to give us the same data? Okay, if I hear from whomever it is, this is hard news. Now, how do you know whether it's hard news or commentary? Listen to the adverbs. Listen to the adjectives. When they say that something is a lie, well, how do they know it's a lie? Have they vetted it themselves? Or are they just reading a script? When they say it's a illegal war, and here's a better one. Anytime a politician, a congressperson, says anything to you when they're in their official capacity at the Capitol, don't believe them, because they don't have to tell you the truth, and they're protected from any kind of libel, right? They can't be sued and can't be held accountable for what they say on the floor of Congress. Stupid. We should be able to trust them there, but we can't.
You know better than that.
Right? So whenever you hear Schiff talking, that means he's lying. It's not a very difficult thing to understand. Again, that's not hard news. That's my opinion, and I'm right. But we look at some of these things that are going on. ADP employment change data, the weekly data, that was came out with a strong number. So I'm just going and saying, okay, the forecast was 39,000. The actual number was 49,750 new jobs average over the last 4 weeks. That's giving us strong data on the housing front. When you hear Elizabeth Warren talking, well, it doesn't matter what she's saying because she'll change it in the next minute. 3 years ago in the Biden administration, she wanted to lower more interest rates. Now being that Trump's in office, he shouldn't be doing it. When she sends a letter to the Federal Reserve chairman, that's okay. If anybody else says it, that's not good. So think about those concepts about these people that are speaking to us, the representatives or so-called representatives. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Max the match. Then stop feeding your 401k and start feeding this instrument instead. Again, opinion, I'm right. More options are popping up this real estate. We'll talk about that. Jim Norton's going to chat with us about real estate, all that and more. Reach me anytime, off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. We'll be back in just a few.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, shame on you. But we do have one available for you for free. rsrlinks.com/mobile app, rsrlinks.com/mobile app. What did rates do yesterday? I'm going to tell you right now. So they were mostly up. Conventional 30-year fix, 6.231 up. Jumbo 30-year fix, 6.459. That was down. FHA 30-year fix, 6.093. That was up. VA 30-year fix, 5.822. That was up. USDA 30-year fix, 5.944. That was up. And if you want our thoughts about the market, just join the Ron Siegel Radio community, rsrlinks.com/HBOD, rsrlinks.com/HBOD. What are the markets doing today? Well, we look at it and we see that the S&P 500 is up 63 points. The 10-year Treasury flat, 4.295. And the mortgage bond still up only 2 basis points. Bonds up, rates down, 2 basis points. Doesn't tell us a whole lot of anything. It's basically saying market's doing pretty much nothing. Oil prices. Well, we're watching those oil prices, and they're still lower than they were, but they're up $3.50 today, while stocks and mortgage bonds both pretty flat after President Trump indefinitely extended the ceasefire between U.S. and Iran. I heard that this was actually 2 to 3 days now.
Right. It changed this morning, 3 to 5, I think.
Yesterday, U.S. representatives were supposed to travel to Pakistan for a second round of peace talks, but Iran refused to attend. With the ceasefire expiring last night, President Trump extended it at the request of Pakistan, saying that the government of Iran is so fractured that he wanted to give them time to come up with a unified proposal. Yeah, haven't we heard that before about Iran doing anything they can to delay everything? In the meantime, the blockade of the Strait of Hormuz will continue. The markets are taking this outcome as a win versus the worst case scenario, which would have been bombing continuing after the expiration of ceasefires. Pending home sales from Redfin. Pending home sales, signed contracts on existing homes rose 1.5% in March, which was much higher than the 0.5% expected. Adding to the beat was an upward revision to February, which was taken higher from 1.8% to 2.5%. While sales are coming off low levels, it was encouraging to see 2 months in a row of higher than expected sales, especially since rates rose in March. This speaks to pent-up demand. Redfin reported that home prices rose close to 2% year over year in March, which is not too bad considering. Kevin Warsh was impressive in his Senate confirmation hearing. He was met with some hostility. Does that surprise anybody?
Surprise, surprise.
Especially around his personal investments and Fed independence. Now, let me ask you something that's just a simple thought. Now, they're upset that Warsh has personal investments. Wouldn't you want a Fed funds chairman that has personal investments and knows what's going on? Maybe we ought to go to Skid Row and find somebody there to control the most important economic job in the world. I mean, some of these senators are just such idiots.
Such an idiot.
Yeah.
Such an idiot.
Ward has made an agreement with the Government Ethics Board to divest all of his personal investments within 90 days of being confirmed. And he went above and beyond the agreement to say he would sell the majority before taking office. He was asked if President Trump told him that he had to cut rates, to which he said that the president has never told him he had to cut, and he would have never agreed. He stood firm on his belief that the Fed needs to be independent. Warsh has got a long history of being an individual thinker. Perhaps the biggest news was how he plans to reform the Fed. Amen. He was very critical of their failures in 2021 and how they handled inflation. He outlined that the Fed is looking at old, antiquated measures of inflation like PCE, and they don't have to anymore. He wants the Fed to look at the timed mean measures of inflation, which focuses on what they can control and gives them a much better picture of the true underlying and long-term inflation, removing the highest highs and the lowest lows that can be from one-time price shocks like oil. He also thinks the communication at Fed needs to change. He thinks the Fed is too transparent, with Fed members opining in advance and in the media spotlight far too much. Warsh said that they are humans and they then want to stick to what they said, but they should be changing their minds based on incoming information. He'd like to go back to the Fed before Bernanke and Yellen, where they did not have a press conference at every meeting or forward guidance in order to restore the credibility of the Fed. Bottom line, Warsh sounded smart, polished, and ready to lead the Fed to a new age of policymaking where they are looking at new measures of inflation, labor, contemplating the impacts of AI, and changing the way the Fed communicates. Thank goodness that will be a fresh look compared to Jerome Powell.
Such an idiot.
Speaking of idiots, Tom Tillis, although being supportive and coming to the defense of Warsh, said he still would block any confirmation until the probe from the DOJ into Powell had concluded. Yeah, you wouldn't want to watch anybody that's spending $2.5 billion of taxpayer money. Why, look at that. They're in Washington.
On a renovation.
Yeah, on a renovation.
It's a renovation, not new construction, renovation.
Yeah, can you imagine that? I mean,
what do you think the bill? I'm dying when they do that.
That's the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Let's chat with Jim Norton about what's going on in this world. Jim, you've done a couple buildings and renovations, and so you take an old building. I'm going to ask you this because you know it better than I. If you take an old building, now it is a good sized building, and you're trying to make it ADA compliant and bring it up to standards, $2.5 billion.
That's kind of what I'm saying is I would have started with what's the valuation of the building currently as is. I mean, if you tore it down, what would it cost? Would it cost $2.5 billion to build a whole new one? That's just $2.5 billion. That's a lot of building. I think
that when they rebuilt the World Trade Center, wasn't it less than that?
I think so. That's what I'm saying. Is I'd have to go. I didn't prepare for that question, but I'd go back and look and see what was built.
$400 million.
Well, wait a minute. What did Obama's library cost? $4.5 billion. No, I'm just for the concrete monolith.
What about the ballroom? Isn't that like $400 million?
Yeah, the ballroom was only like $400 million. So, but that's I mean, this
no offices there.
This has offices, restrooms, and everything.
I hope they have restrooms in the ballroom.
Well, yeah, that's true.
Yeah, you're gonna have to have something.
I don't know, and
let's get back to
$2.5. I mean, it just seems like an exorbitant amount of money, but then again, when you have your brother-in-law doing it, I guess.
Yeah, I get maybe that's it. So let's talk real estate. What's going on in the real estate world, Jim?
Supply and demand. Economics 101 today. I'm on fire for supply and demand.
Okay, so
I've been talking with friends around the country and reading some things. Yes, I have a few friends.
Okay.
Well, they don't admit to it. But anyways,
there's Starbucks gift cards.
One was very interesting. He was given an update on the Austin market, Austin, Texas.
Okay.
Hottest thing is sliced bread in the last 10 years, right? Everybody was moving to Austin. Austin prices are going up.
Wasn't there?
Huh?
There's a song about that.
Is there?
Going to Austin.
Oh, I didn't know that. But anyways, Austin is now in oversupply.
Oversupply. So people are leaving Austin.
No, people are leaving Austin, and Austin has caught up on its building. So so that rents have gone down, prices are softening, and so It's just a matter of time before you see that, I think, in other places. But what's the most interesting one? So I was just flipping around, and I mean, I'm not looking for who or verify or whatever on the information. But according to an article yesterday, and I forgot who started it because I was on a reprint, and California in the last 6 years has built 600,000, or was it 6 million? But anyways, they had built inventory, but we have lost so many people that you didn't notice that the inventory of homes had gone up because we also had so many people moving out and leaving California. But it was like, okay, so how come it's not affecting the
Pricing.
the pricing? Well, supply and demand. Yes, we still need 2.8 million. So it's 600,000. We need 2.8 million to get up to a point where we would have a oversupply or something of that nature.
And we should mention that there's that number's been around for a while. The 2.8 million.
Oh,
needed.
I think that's been around. If I remember correctly, I think that was around the 80s. Remember the old?
And our friends though, over at Chapman University in their economic forecast, have said that number is way overstated. They've been saying that for years and years, that the number is way higher. And when the late Esiadebe went and told that to the governor, he didn't want to hear it.
Yeah,
and not that he just tells them; he shows them the exact data.
No, they don't want to hear it. But
doesn't fit the narrative.
But let me. I get to put my urban planning hat on.
Okay.
And today, and you have to remember, we were talking about Austin as a city.
Right.
We're talking about California as a whole. So that's really apples and oranges. That's not comparable. But in the state of California, you say, okay, well, if we added so much housing, how come it's not helping? How come it's not affecting it? And it's like, well, you got to remember, where was that added? You don't notice it maybe in Los Angeles because it was added in Riverside County. It was added in San Bernardino County. It was added out in, East Bay or something for San Francisco. It doesn't affect the overall prices. So if you want to basically, let's put it this way, you want to be in Newport Beach, they're not making new land.
Sure.
Simply put. So that there's only X amount of land on Balboa Island and it's already sold. And so if it resells for a premium.
Absolutely. And a friend of mine is the mayor in Del Mar, and the state of California went and said universally, every city has to add X amount of housing. Well, she says, we don't have any land. How do we supposed to add housing if you don't have land to do it on? So
interesting.
We're going to come back and we'll continue our conversation with Jim Norton. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. More options are popping up this spring in real estate. We'll talk about it. National report. And you can reach me anytime. Our off-air number is 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Real estate. More options are popping up this spring. Did you try to buy a home last year, or you ended up pressing pause? Maybe you couldn't find a home that really fits your needs, or maybe the ones you liked just weren't affordable. according to a recent survey from NerdWallet. Those were the top 2 reasons buyers gave up on their search in 2025. But this spring, there's one trend that could help fix both of those frustration points. More homes are hitting the market. The number of fresh listings is almost 2 times higher than a few months ago. Data from Realtor.com shows there are nearly 2 times as many new listings hitting the market today as there were just 3 months ago. Those are numbers the seller just put up for sale. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed, you are seeing a chart. We like charts. And it shows there are nearly 2 times more fresh new listings coming onto the market than just 3 months ago. So we watch that for you all the time. That's a significant rise. And while we usually see an uptick as we head into the busiest time of the year, this increase was bigger than the normal. Jake Krimmel, senior economist at Realtor.com, explains, quote, new listings jumped 21.2% from February to 439,000, a larger than typical seasonal surge. March typically sees the highest month-over-month jump in new listings of the entire buying season, averaging an 18% increase since 2017. This year, it exceeded 20%. That means more sellers are jumping back into the market, and that's giving buyers more fresh options to choose from. So if you felt like you'd seen everything out there and still nothing was quite right, this may be your moment. With that many just listed homes, one of them could be exactly what you've been searching for. Where you have more options. This trend is happening across most of the country, so you should have more options pretty much wherever you are. Earlier this year, the Northeast had fewer new listings because winter storms delayed sellers from putting their homes on the market. But now that region is catching up fast. In March, new listings jumped across nearly every state, especially in the Northeast, helping drive a strong national rebound. What rising inventory means for you? Right now, there are almost 1 million homes for sale nationwide. That's up over 8% compared to last year. With that many homes on the market, there's a much better chance something will fit what you're looking for, especially with so many fresh options being added right now. Odetta Cushy, Deputy Chief Economist at First American, explains, quote, one of the most encouraging signals heading into the spring home buying season is the improvement in for-sale inventory levels compared with last year. More homes on the market give buyers greater choice, and combined with improved buying power, expand the range of homes they can realistically consider. In other words, your purchase may feel very different this year. Bottom line, more fresh listings are hitting the market right now, and that's creating real opportunity. If you put your search on hold last year, this spring may be the time to jump back in. Let's take a look at what just hit the market and see what could work for you. And don't forget about the payment assistance programs available at Ron Siegel Radio. We got those available for a lot of people. That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. Continuing our conversation, Jim Norton is in the house. Bobby Cook is with us. Hey, Bobby, how are you this morning? Glad to see you chiming in here. Hope you're having a great day. So we were chatting with Jim before the break, just chatting a little bit about what's going on in this real estate market, where we're at, what's happening, and the shift in the inventory. And I'm trying to get a report on my screen, which I'm not having much luck with right now. But Jim, so you're seeing, do you see in Orange County more inventory?
Yes. But I also see, just because you bring a house on the market doesn't mean 20%, which I've not figured out where they're getting some of their numbers from, because I've seen a lot of homes come out and then price decrease. After nobody looks at it, they're sitting there stagnant. Once they get that price down decrease, then you start to see it, all of a sudden it moves. And these agents are not pricing well. I don't know if they haven't had any practice or what they're doing, but they're sure not pricing well for the area. You know as well as I do, real estate is neighborhood specific.
Sure.
More so than when we talk, we always talk in these broad terms of percentages and numbers. It's hard for
anybody, especially with what I do.
Yeah.
Right. I mean, when you're doing a radio show or people that are on TV, they can't really tell you, okay, 92807, this is what's happening, because 99.9% of the audience doesn't
Right.
care about 92807.
No, exactly.
Now I'm sitting here looking at 92807 right now. And it's kind of interesting because you just made this comment, and for some reason my computer's not giving me data I want to, but 30% of the properties had a price decrease.
Mm-hmm. There you go.
And the average days on the market is going down a little bit, 42 days on average.
Yes, I would agree there. If it's priced right, it's moving well.
But if we go back just to March 13th, it's like
Mhm.
a month ago.
Yeah.
14%, 14% of the properties had a price decrease, and now it's 30%.
Yeah. But also though, you do see, I mean, it's a standard trend, which is spring is the best time of the market. And
Sure.
we are dead set right in spring. So it's time to go. But what's interesting is interest rates are not playing. So I here comes my Ron Siegel plug. Strategy.
Right.
Strategy beats rate. And you know what? I think people
Always.
are finally always. I think people are finally realizing, look, the days of 3% and 4% were contrived. That was because they were dumping so much. The
Brian
Fed
DeFee
was
says
dumping.
the word is artificial.
Okay, thank you. And the Fed was dumping so much money and driving the price and driving those interest rates down. So unless we do that again, which isn't good for the economy, we're not going to back to 3 and 4. If we get into the 5s, then you refi. But if you're sitting at 6, get your deal done, make your deal work, figure out what your strategy is. I'm not going to get into what that is. That's your job, but I can get into as far as the pricing and your negotiations that you have to do. The other thing I think is
Jim, I tell people all the time, the average consumer doesn't understand payment assistance, right? So what do? They call somebody like me, what's your rate? Okay, it can be whatever you want it to be. Let's see what you need and what we're trying to accomplish, right? But the bottom line here is then they go to you as a realtor and say, okay, that $800,000 house, I want to offer $725,000. Well, why offer $725,000 instead of offering $750,000 or $775,000 and asking the seller to put 3 or 4 or 5% toward the payment assistance?
I agree with you. I mean, it's a strange thing, but I was going to add to that, and this is right up your alley as well. I've never seen anybody search one of the online services now that are very predominant for people to search. I've never seen one of them sit down with a person and say, let's look at your situation and figure out how strategy. They don't do that. The algorithm doesn't do that. All the algorithm does is says, you can afford this much house. And then when you look at that, you put your information in, it says you can afford a $600,000 home in a neighborhood that's selling in the 900s. So what's good is that? But if you sit down with you and me and some strategy, we can close that gap. We can work that gap.
I just had somebody,
and this is where these algorithm-based
right. You can't do that
online. This is where I think people are. It's like after a while, people I think get tired of social media because it just bombards them with everything.
Well, I took somebody this last weekend that was declined for a $640,000 purchase and showed them exactly how they could buy an $800,000 house.
Yeah. And
because we looked at a different strategy.
Yesterday, your conversation was about self-employed.
Right.
And that's the same thing. Self-employed is you look great on your tax return, because that's the name of the game. But you take that tax return to the bank and the bank goes, do you make any money?
Yeah. How are you paying rent?
It's like, because you pulled up in a Rolls Royce. So what the heck is going, you know what I'm saying? I'm making a joke of that, but that's got
a brand new Mercedes out there that's got a $1,200 payment, and you show that you make $2,000 a month.
Yeah.
On your taxes.
We're not a congresswoman here.
Exactly.
We can't just keep changing around. So it's a tough balance, but it tells you that if you're not sitting down and looking at your strategy, you're just going in and trying to think, oh, I don't want to talk to anybody because they'll call me all the time. I don't want to talk to anybody because I'm embarrassed of what I'm going to put down. I don't want to talk to anybody because I don't understand maybe real well what they're saying. So I'll just go in and I'll put it in an online, at my bank. They have an online, I'll enter it. And then you find out, wait a minute, I can't buy anything. The closest thing I could buy is a track out in Quartzsite, Arizona.
Maybe.
And, maybe it's like, if anybody knows what Quartzsite is, that's
There's a
Blythe.
lot in thermal that has a
exactly. There's a lot
unit
of
on there.
light, Salton Sea, so,
Nothing against thermal, but
but it's a little farther.
Yeah.
But what's pathetic is you and I know where these places are.
Yeah.
That anyways, but you follow what I'm trying to say is
Absolutely.
like, you've got to sit down and
Yeah.
really understand what it is you're trying to do. I mean, I even do it with people that say, we're thinking about moving out of state. And it's like, well, what's your strategy? Well, what do you mean? Why don't you're not asking us where we want to go. You're asking us what our strategy is. And it's like a first strategy, because, do you think about wanting to come back? Do you think about that?
That's a big one right there. Let's talk about
do you
that
need
when
to sell?
Let's talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, max the match. Then stop feeding your 401k and start feeding this tool instead. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. What is the life insurance policy? The Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. What is the life insurance policy sitting on the shelf next to your 401k could actually be part of your retirement plan, not instead of it, alongside it. Tax deferred, flexible, and something you can actually use while you're still alive. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, I want to talk about universal life insurance, but not the way most people talk about it. Most people hear life insurance and they think something my family gets when I die. That's true. It's also the least interesting thing universal life insurance does. Let's walk through it. Universal life is permanent insurance. It stays in force your whole life as long as the policy is funded properly. But unlike other permanent policies, the premium is flexible. You decide how much to put in above a set minimum. That flexibility is what turns a life insurance policy into something closer to a retirement vehicle. Here's what happens inside the policy. Every dollar you put in above the cost of insurance goes into cash value account. That cash value grows tax deferred. Say that with me. Tax deferred. No 1099 at the end of the year. No tax drag slowing down the growth. The account compounds on itself year after year without the IRS taking a bite along the way. Now, fast forward 20, 25 years, that cash value has been quietly building. And here's where it gets interesting for retirement planning. You can borrow against that cash value under fairly favorable terms. The interest you pay on that loan goes right back into your own policy. So you're paying yourself. And because it is structured as a loan against the policy, not a withdrawal, it can be income tax free when it is done correctly. Now, here's my opinion, and I want to be clear. It is my opinion. If you qualify for the policy, I believe universal life insurance is a stronger retirement vehicle than your 401k, above and beyond any amount your employer is matching. Let me break that down. If your employer matches the first 4% or 5% or 6% of your 401k contributions, you absolutely take that match. That is free money. Nothing beats free money. Put in whatever it takes to capture the full match every single year. But once you're past the match, every dollar you're voluntarily putting into the 401k is a dollar the IRS gets to take later at whatever income tax rate exists when you retire. Nobody in this business honestly believes tax rates are going down over the next 20 or 30 years. So you are essentially kicking a tax bill down the road and hoping the rate is lower when it catches up with you. Inside a properly structured universal life policy, the growth is tax deferred, and the access can be income tax free when you take it as a policy loan. That is a very different math problem from a traditional 401k. For families who have the income, the health, and the time horizon, that second bucket can work harder over the long run. My opinion, talk to your tax and financial professionals before you act on it. And that leads directly into two things you have to get right before you ever implement this strategy: qualifying and suitability. First, qualifying. You cannot build a retirement strategy around a policy you cannot get. Universal life insurance is medically underwritten. Your age matters, your health matters. Your family history matters. You have to explore whether you are insurable and at what rate class before you map out anything else. Start with the insurability question. Everything else comes after that. Second, suitability. Eligibility asks, can you qualify? Suitability asks, should you actually own it? Two different questions. A certified liability advisor is trained to answer both, and that is what separates this conversation from a typical product pitch. Here is what suitability looks like when in practice. Universal life works when you commit to funding the policy consistently over many years. The flexible premium is a double-edged sword. Underfund it for too long, and the internal charges eat through the cash value. The policy can lapse. And if lapses with a loan balance inside it, you can trigger a taxable event you never saw coming. If you are under age 59 and a half and you pull earnings out the wrong way, a 10% federal tax penalty can be waiting for you. Life insurance is not FDIC insured. The guarantees depend on the financial strength of the issuing company. None of that makes sense, makes universal life bad. It makes it a strategy that requires attention, just like your mortgage, just like your investments, just like your household blended interest rate. Here's an example. Picture a high-income professional, age 48, maxing out the 401k, maxing out the Roth, asking me whether he should pay down his mortgage faster with his extra income. I asked him what he was really trying to accomplish. He said he wanted another tax advantage bucket that he could generate income in retirement, give him liquidity along the way, and leave something behind for his kids. Before we went any further, I sent him to get insurability worked up. He came back in a preferred class. At that point, the conversation became real. We started mapping out how the policy could sit alongside his other retirement assets, capturing the 401k match, and then routing the additional savings into the policy instead of stacking more into fully taxable retirement account. That is how this is supposed to go. Strategy first, insurability second, policy third. So what does this mean for you? If you've been looking for another place to grow money tax deferred and you have the income to fund it consistently, universal life insurance is worth a conversation. Capture your 401k match. Then ask the two questions that matter. Are you insurable? And does this actually fit your household strategy? Get those two right, and you have the foundation of a decision you will not regret. That is a conversation I have with families every week by Zoom. No pressure, just strategy. And strategy beats rate always, every time. Same rules apply, whether we are talking about a mortgage, retirement account, or life insurance policy. The product does not build wealth. The strategy does. If you want a clear next step on building out your household strategy, the mortgage piece, the liquidity piece, and where a tool like Universal Life might fit, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Book a Zoom with me and we'll map it out right together. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. Continuing our conversation with Jim Norton, we are chatting about real estate with Jim. That's his forte. But you know something? Jim made a comment to me during the break, and we started talking about this during the last segment. If you missed it, shame on you. We're not going to recap. But Jim, you're talking about what's your strategy, right? People leaving California and saying, okay, I'm leaving. And, you know, they just think, in fact, a friend of my wife's just moved, just sold her house in Southern California because she's moving to Tennessee.
Okay.
Now, she doesn't know if she's going to like Tennessee.
They got in and out.
Yeah, they
got all of it in and out.
Yeah,
they got most of it.
They got out of California.
Okay.
Now they're going there. And what happens if they don't like it?
It's amazing how many people I've run into that say the same thing. And I've said this for 20 to 30 years is
Maybe more.
When you don't have to be nasty. But I'll give you an example. A friend of mine, we were coworkers, and he was the head of the marketing department. And he said, I took a job in Dallas. And he says, I'm, moving to Dallas, and lived in Foothill Ranch, which is off the 241 up there,
Sure,
up by Ranch Santa Margarita, right? Nice area. And I said, well, who you going to? Blah, blah, blah. Okay, you're selling your house. And he says, yeah, we're going to sell the house. We're going to buy a house in Dallas. It's because the prices are great. This is a while back before everybody did all this shifting. And 8 months later, he wanted to come back. Well, the price of that house went up, and the price of his house didn't appreciate. And he had spent the difference, the profit on, remodeling, moving in, getting settled and everything. And all of a sudden it wasn't so easy to get back into California because of the price difference. It's easy to leave, but it's not easy to get back. And it's
then when he
like,
comes back, if he bought the same house again, even if he bought it at the same price, his property taxes now change.
Exactly. There you go. Thank you. You got all the strategy, you got all the parts. And that's why the conversation needs to be succinct, because the last thing you want to do is get back into, let's just pick on Tennessee. And you go back there and you say, well, wait a minute, it's humid, it's hot, it's muggy. And it's like, it's the East. What did you expect? I mean, we're dry, we're weather. I mean, regardless of anything in California, the weather is really what keeps us here.
Sure.
I mean, we're all walking.
You're not here.
I mean, come on.
Taxes?
It's April. We're still, I think there's a couple places getting storms, winter storms still, and we're running around in shorts and flip-flops. Okay. That is so true.
So here, let's talk strategy for a second.
Okay.
Jim. So you have a house in Southern California, and you've owned it for 10 years. You've probably got 30 or 40% equity in it, just if you haven't refinanced it over and over again and taken the equity out. You do the quick and easy a home equity loan that we talk about all the time, right? So you have your money in 5, 6, 7 days. If you qualify, it's not a guarantee.
Right.
And you rent out your California property. Your equity is going to give you that equity loan is going to give you a good down payment for Tennessee, for Dallas, for many areas in the country. And if you don't like if you love it there, you're in good shape.
Right.
You can always come back here, hire Jim Norton to sell your house for you. And it's going to go up in value, most likely between now and 12 months from now. But if you find that you don't like it in Mississippi, the mosquitoes are bigger than the cars, right?
Yeah.
And you want to come back. Okay, you wait till the lease is up. You come back and you go right back into your old house. You might have to do some refurbishment because you had renters in there.
Right.
But mom wants it refurbished anyway. She's going to always
Yeah,
want to have something new.
they're gonna, that was gonna happen.
Right?
That was a
Sell
given.
that old property and come back. Or rent in the new city for a year.
My biggest, obviously, that my children are now in their 20s and ready to, and they're starting their careers. I look at this situation going on with a lot of the real estate in California is what is going to happen to, if you have a 5-year-old today, you imagine, I don't even want to do the math of what they would have to cope up with.
I've got a great niece today. Does that count?
That counts.
So today's her first day of life.
Okay.
Just not only, I can say 2.5 hours old.
All right. There, congratulations. But okay, so let's use your great, what do you think in 22 years the house price is going to be in Orange County? And how is that child going to afford that house? So, I mean, thinking as parents, you have to think about that strategy. If you just pick up and say, we're heading for Tennessee, well, it's one thing to head to Tennessee because your children have already moved there and you're catching up to them. Maybe that ones I understand because they've done a lot of traveling to Tennessee. But when you decide that you want to be the leader and you want to head for Tennessee and your children want to stay here, that's your renters. There's no reason they can't rent the house. At least it gives them a leg up, because then you can come back.
You have to put a budget in for airlines. You're going to want to come back, once they have the kids. I mean, the grandkids.
Yeah. Oh, once they have grandkids, so yeah, there's a lot of factors, but you've got to think about all those different things. Although, I can't remember specifically in the article when I was reading with the 600,000 homes built and everything. One of the comments is that the market dynamics have changed, that their single family is not as popular right now because the couples today are not having kids, or they're having only one kid. So their choice of a product is smaller than a larger single family. Like we always wanted a 4-bedroom because we're going to put all our kids in it, right?
Going to multi-generation now.
And multi-generation. Oh, well, don't start me on that. It's a whole show. I can tell you right now, I think the greatest purchase in the world is a big lot where you can put an ADU, and then you go.
I don't want to live with my kids. Oh, I'm not. So I shouldn't say that on
You know
radio.
what? You say that, but it's economically.
Hey, if you want to talk about strategy,
that's strategy, man.
Hey, give me a call and I'll put you in touch with Jim Norton to talk about strategy. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.